Watching All You Need to Know. Over the next half an hour, we'll bring you up to speed with everything that you need to know at the start of your day so that you can start ahead of the curve. Let's start with the headlines. US November CPI cools with the headline inflation at 3.1%, but core inflation remains elevated at 4%. All eyes are now on the FOMC meeting outcome slated to be announced later today. Back home, headline inflation rises to a 3-month high in November at 5.55%, but it's below consensus estimates of 5.87%. And separately, the IIP grows 11.7%, and that's the highest pace in 16 months. Oil slips overnight on expectations of higher crude production by the US, and as Russian oil shipments rise, Brent trades at below $74 to the barrel. Both OPEC and IEA are expected to project slowdown in 2024 global oil demand growth. US equities rise with all major indices touching a fresh 52-week high. In fact, the S&P 500 hits the highest level since January 2022. The yield on the 10-year Treasury falls just a tad bit and hovers around the 4.2% mark ahead of the Fed meeting outcome. And the COP28 summit faces a gridlock as the climate negotiators in Dubai await a revised draft deal after many countries criticize the previous version as too weak because it omitted a phase out of fossil fuels. Now, the top story today is the fact that headline inflation in the US came in at 3.1% in November, a print that was broadly in line with market expectations. The one concern is that core inflation, which excludes food and fuel, remains elevated at 4%. Remember, we've got the outcome of the ongoing FOMC meeting later today, and a pause this time around has mostly been priced in. But market participants are still already looking forward well into 2024 and are trying to gauge or anticipate Fed action. There are a lot of them that are projecting several cuts, not just one, in 2024. We've seen continued resilience, though, in the US economy, so the jury's out on whether or not there will be rate cuts. We are going to be speaking to a global expert in just a bit. But before that, let's turn to some other global news, which is the fact that there's been a sharp decline in crude prices overnight. West Texas Intermediary fell below the $69 per barrel mark, while the global Brent actually fell to around 73. It has recovered from that point. That's because Russian crude exports by sea rose to the highest level since early July. And what's more, the estimate for US production was raised by 30,000 barrels per day from the last projection that was last month. All right, now let's talk about the key macro data that came in for us here in India as well. You had the latest retail inflation print for the month of November. That stood at 5.5%, but that was below consensus estimates. And you also had IIP, which came in at a 16-month high. Pallavi is here to give you some perspective on that. Pallavi, broadly, a good set of economic data?
Absolutely, and on both counts, Alex, both inflation and industrial output surprised positively. So let's start with inflation. It is at a 3-month high. It stood at 5.5%. That's compared to a print of 4.87%, like you said. But despite the pickup, it came in lower than expectations. We were actually estimating a print of about 5.78%, like you mentioned. It's also the third straight month that inflation has come in within the central bank's tolerance band. Now, food and beverage inflation continues to be the culprit, for the higher inflation print, and that's coming at 8.02% compared with 6.24% that we saw in October. And I would like to draw attention to some key components within this bracket. Cereal prices, for instance, have risen 10.27% in November. Vegetable prices have risen 17.7%. Pulses was at 20.23%. So the expectation going forward is that December is likely to see about a 6% print. There is a fair chance of that, though we're still to see how vegetable prices pan out for the remainder of the month. Upside risks to food inflation continue. The key risk, of course, is because of the impact of uneven monsoon performance, currently low rabi sowing and low reservoir levels. But at the same time, we are expected to see some benefit from continuing government intervention and also the incoming Kharif output next year. What has been a source of comfort is core inflation that excludes food and fuel. And the reason this is a positive and needs to be taken note of is that it shows that price pressures are not feeding into generalization of the print and pushing up the print further. That is something that the governor had said we need to watch out for. Now, quickly looking at industrial output, the fastest rise in 16 months at 11.7%, like you said. But while this was above expectations, we will see some moderation going forward because of waning base effect and the fact that we are no longer going to be in festive season.
Fantastic. Thanks so much, Pallavi, for wrapping up that macroeconomic data from back home. But let's turn our focus once again to the global stage, because the key event that global markets will be looking forward to will be the outcome of the ongoing FOMC meeting, and that's going to be out later today. We've got Mark Mathews of Julius Baer joining in to give us some perspective on what he is expecting. Mark, based on the latest inflation print, I think that gives a lot of people confidence that are projecting cuts in 2024. Are you in that camp as well, or do you think that we'll have to see considerable more data for you to call that very clearly?
Good morning, Alex. We are in that camp, but we're in the latter part of the year, whereas I think the consensus is expecting a first cut in the second quarter. We think the economy is still very robust. Everything we look at, with the exception of industrial production, is telling us so. And therefore, we don't expect a cut until September, and maybe one more between then and the end of next year. So we're only looking for 50 basis points, and really in the latter part of next year.
So then what are the various other factors that you will be tracking in terms of the flows? Because we've had a few people that we've spoken to just this week that have said that what has happened with the US bond yields is a little overdone. They've come off too sharply. Do you see that reversing just a tad bit heading into next year? And what are the implications for global capital flows?
I think that the bond yields are priced more or less correctly. If they fell very precipitously, like say down to 3%, then clearly that would be a signal that something is going wrong in the economy. They're not doing that. We think that these levels are still attractive. I mean, yes, the 10-year was at 5% and now it's at 4.2, but 4.2 is still a generous yield if you're taking the view that inflation is going to continue to come down and the Fed will cut rates next year. And of course, you can get higher than that in, for example, investment grade corporate bonds, which are yielding about 5.5% thereabouts. So the bond market is a good place to be looking around right now. And that's hardly a non-consensus call. I think almost everybody's saying that.
What about equity markets in emerging markets, and how do you look at that scenario playing out, and in the context of what's happening in China as well, with maybe some of the data coming out from that market not too good or not really sounding very good for global investors? I believe, and correct me if I'm wrong, there was a little bit of an inflow and then that has stuttered just a bit.
Yes, you're right. The data has been poor, and it's the worst performing stock market in the world this year. The Hang Seng Index is down 20%. And by the way, this will be the fourth year in a row that that index is down. And we can go back 60 years for the Hang Seng Index. It was never down 4 years in a row. So it's truly remarkable. I think that we're due for a bounce in Hong Kong, China. I would say the magnitude of 20%. But beyond that, I think it's very much a range-bound market, as it was around 10 years ago, from, let's say, 2010 to 2015. China was in a big range because, similar to today, there were a lot of politics going on. So we're not overweight China. We do say tactically a bounce is coming. But beyond that, the best emerging market we've felt for some time now is India. And you know the story better than I. But it's a growth story. It's a story of improvement in the overall quality of the country in terms of both physical and human infrastructure. And it's a nice coincidence this is happening at a time when global supply chains are looking for alternatives. And we all heard the news on Apple last week that they want to take their global production from 5% in India to 25%. I mean, I think you can extrapolate a lot from that in terms of where India is going. And so that's our favorite emerging market.
Oh, certainly. And I'm quite sure that you know significantly more than all of us sitting in the studio. But one last view on crude oil prices, because that was very active overnight, Mark. And you've seen Brent fall all the way down to about $73 to the barrel. Do you think there's further downside, or do you think that it will be more or less range-bound heading into the new year?
We think that the low 70s is priced about right for oil. It does assume somewhat of a global slowdown, and we are looking for the world economy to slow down next year. Not so bad as to be in a recession, but looking for world growth. Look at my notes here, to go down from 3% this year to 2.4% next year, and then rebound to 3.1% in 2025. So there's ample supply of oil. Anytime it gets really above 90, you see a lot of the players on the side coming out, like Iran producing a lot more, Brazil, Canada, the shale producers. So I see no reason for it to go back to 90 anyway. So where it is now is just nice.
Always a pleasure speaking to you. Thank you so much for taking the time. All right, let's quickly shift gears and turn back to the Indian equity markets and tell you what to expect from the F&O space. We've got Agam joining in to give you some perspective on the latest cues. Agam, morning.
Morning. Well, Alex, it seems like we've slipped into a little bit of consolidation as far as the benchmarks go. The Nifty, while it continues to test 21,000 on a daily basis over the past couple of sessions, where we're also starting to see a little bit of weakness seep in. Potentially, there is profit taking as far as these benchmarks go. And we saw unwinding there to the tune of nearly 2.6% in open interest as far as the Nifty futures are concerned. Moving on to the Bank Nifty as well, there was about 0.5% weakness on its underlying, not too much change in terms of open interest, which also means that at least a lot of newer traders who are perhaps looking to build positions aren't doing so, considering they are perhaps waiting for more data to come through. Now, as far as your options market is concerned, we continue to see a substantial amount of open interest as far as the 21,000 call is concerned. That perhaps will serve as a near-term resistance, and should we go above that mark, sustain above that mark, that's when we potentially will see some traders start building on their longs. And you know, this was evident in yesterday as well, because that's exactly where we saw most amount of writing, the 21,000 and the 21,100 calls. Moving on to stocks, let's see where we have in fact seen an increase in open interest. So longs building up in Ultratech Cement, Granules and HDFC Life, and fresh shorts in PI Industries and Bandhan Bank, though PI Industries will be in focus because we have a handful of broking notes there coming through. And in terms of those stocks which saw unwinding, longs unwinding across all the top 5, well, declines as far as OI goes: Coromandel, Sale, ONGC, Polycab and Sun TV. Once again, Alex, it is going to be the Bank Nifty weekly options expiry, so all eyes on that one, along with its constituents.
All right, thanks so much, Agam, for bringing us those details. We have to slip into a very quick break, but we leave you with what Prime Minister Narendra Modi had to say about artificial intelligence. Listen in.
एआई के अनेक पॉजिटिव पहलू हैं, लेकिन इससे जुड़ी नेगेटिव बातें भी उतनी ही चिंता का विषय है। एआई 21वीं सदी में विकास का सबसे बड़ा टूल बन सकता है और 21वीं सदी को तबाह करने में भी सबसे बड़ी भूमिका निभा भी सकता है। डीप फेक का चैलेंज आज पूरी दुनिया के सामने है। इसके अलावा साइबर सिक्योरिटी, डेटा थेफ्ट और आतंकियों के हाथ में एआई टूल्स के आने का भी बहुत बड़ा खतरा है। अगर आतंकी संगठनों के पास एआई लेस हथियार पहुंच जाए तो उससे ग्लोबल सिक्योरिटी पर बहुत बड़ा असर होगा। हमें इस विषय पर चर्चा करके एक ठोस प्लान तक पहुंचने की जरूरत है कि कैसे एआई के गलत इस्तेमाल को रोका जाए।
Welcome back. You're watching All You Need to Know. Let's shift attention to stock-specific action, and we've got Anushi joining in to tell you about Atul Limited and why it might just be a stock in focus in trade today. Morning, Anushi. What's the latest update on Atul?
Morning, Alex. Quite an interesting update if you see, wherein LIC has increased its stake from 4.97% to about 5.1%. So just a little bit color on Atul Limited. It is in the specialty chemicals business. Now, what is interesting particularly is if you just go back to the Q2 FY24 end and look at the shareholding pattern, LIC has been consistently increasing its share in this particular company, wherein it had about 4% stake by the quarter end, which is now again above the 5% level. So now again the question that comes in my mind with this is there any signs of revival that we expect in those specialty chemicals? Because even if you look at the global cues, they do suggest a revival in this space from Q4 onwards. So this is definitely one to watch out for. Now coming to the stock performance, unlike its peers, it's not the best year for chemical businesses, wherein it had reported about 17% down if you just look at this year-to-date performance, whereas if we look in the previous 5 trading sessions, the stock was about 1% down. So that is one that we should definitely keep a watch on, which is Atul Limited.
All right, thanks so much for bringing us those details, Anushi. Let's also focus in on the pharma space. And it was, of course, one of the underperformers in trade yesterday. We've got Varsha, who's joining in with a list of stocks that could be in focus today. Varsha, what do you have for us? Morning.
Good morning, Alex. So yesterday we saw a large deal of 7.6% stake sale in Mankind Pharma, but buyers and sellers were not known, but we have data today. So three major PE investors have sold a combined 7.6% stake in the company for over 5,588 crore. Now among sellers are Hema CIPEF, then we have Karen Hill CIPEF and Beach Limited who sold the shares. Now Kotak Funds India Mid Cap Fund has bought almost 0.5% stake in the company. Now Beach, which acquired 9.9% stake in Mankind Pharma for an average cost of 550, which marks a profit of over 3x on sale of its 4.46% stake, while Cairn Hill have made a profit of almost 6x on its 1.73% stake sale. And then we have Shilpa Medicare, which received approval from TGA Australia for its Bangalore unit for medical wafer manufacturing plant. Now this unit is already approved by MHRA UK, and this unit supplies oral film products to US and other markets. Now this approval will enable this company to market its oral film products in Australia also, and this has a pipeline of products in this type of dosage form for the future. Then lastly we have Laurus Lab, where its subsidiaries Laurus Synthesis Private Limited receives 5 observation after US FDA inspection at its Vizag plant. Now inspection was conducted from 4th December to 12th December, and company will address the observation within the stipulated time.
All right, thanks so much for bringing us those details, Varsha. Now, in the banking space, you've seen a few banks raise funds of late, and one of them this week, of course, was J&K Bank through its QIP. There are a few more updates in terms of stakes that are on the block, or in fact that are exchanging hands. We've got Himansh to give you some perspective on that. Himansh, one of the updates is on Indian Bank. Morning.
Good morning, Alex. Yes. So Indian Bank, you have your Bank of Baroda and Axis Bank that are in focus today, and this is on the back of various capital allocation as well as restructuring plans. Well, starting off with Bank of Baroda for one, the company, or let's just take Indian Bank for example, it's opening its QIP for raising up to 4,000 crores on December 12, and the floor price for the QIP is set at 414 rupees, which indicates a discount of a substantial 5.28% to its yesterday's close on the NSE. The last QIP undertaken by the bank was back in March 2021, where the board approved QIP raise of the similar quantum, 4,000 crores, and it was done in several tranches. Now, capital raising through QIPs allows banks to raise capital quickly and expand their loan portfolio as well as bolster their tier 1 capital base. So it's quite essential, and the street might just see a reaction for this counter. But moving on to Bank of Baroda, you have the board of directors that are going to be meeting on December 15 to discuss further fundraising. They're going to be finalizing the first tranche of their tier 2 debt instruments, and the bank last quarter, for reference, reported a 29% rise in their net profits on the back of reducing bad loans. Lastly, you have Axis Bank, where Bain Capital and its associates are looking to sell 1.1% stake in the bank. Bain Capital will be offering its stake at a floor price of 1,109 rupees, aggregating the total deal value to close to 3,700 odd crores. Offer price indicates a discount to close to 2% as of yesterday's close, and in terms of the number of shares, you're going to be seeing 3.34 crore shares that are going to be divested in the bank. So yes, significant counters on the move on the back of this news flow.
Absolutely. Thanks so much, Himansh. The banking space remains in focus. And one more bank that you should watch out for, it was up in trade yesterday. Yes Bank gained over 5%. And the latest update has to do with non-performing assets, which the bank has put on the block and has invited bids for. We've got Pragati joining in to give us some perspective on that. Pragati, what is the quantum and how significant is this?
Morning, Alex. You're absolutely right. Our best bet or best understanding of the movement in the stock yesterday was because of the notice that Yes Bank gave out. Now, the notice had to do with the fact that the bank has invited expression of interest from associated parties for the sale of its NPAs that are worth about about 4,234 odd crore rupees. Now, this is the quantum of the entire distressed loan book, and this comprises of corporate NPAs and even the retail NPAs. Now, your corporate NPAs are worth about 3,000 odd crores, and the retail NPAs are about worth rupees 1,100 odd crores. Now, the bids for this sale have been invited by the 18th of this month, and the idea behind this is to identify the anchor bid and have an offering up to 100% cash basis. Now, we must also remember that the corporate book NPAs, if we have to look at, it comprises of 8 companies that turned NPA between September 2019 and June 2022. Even prior to this, about I think last year, Yes Bank went for the sale of a distressed loan book worth rupees 48,000 crore, and that sale was made to JC Flowers ARC. So once again, the bank has opted for this route, and it continues to remain in focus, and we will keep a close watch on it.
Certainly. Thanks so much, Pragati, for that. Now, in an attempt to achieve its energy transition plans and meet its EPS goals, the Adani Group has committed to invest $100 billion on energy transition over the next 10 years. The group has set a target to become carbon net zero by 2050 or earlier for 5 of its portfolio companies. The Adani portfolio businesses have an active strategy to decarbonize, plant 100 million trees by 2030, electrify operations, use green sources for energy, and innovate efficient storage technologies, according to an investor presentation by the group. Now, a standard disclosure, NDTV Profit is owned by Adani Media Group, which is a wholly owned subsidiary of the Adani Group, the channel that you are currently watching. Now, sources tell NDTV that the tax department has been conducting searches on Allied Blenders, Mumbai, and that's in their Mumbai premises. That's, by the way, the makers of the Officer's Choice whiskey, in case you were wondering. Smriti has more in this report.
The Income Tax Department is conducting searches on the premises of Allied Blenders and Distillers. Now, the sources have told NDTV Profit that these searches have been going on since yesterday, and company's Chief Operating Officer Bikram Basu, along with other key members, including directors, are present in the Lower Parel office in Mumbai. Now, the company has also confirmed this development and said that it is cooperating with the investigating officers. Now, this also comes at a time when the company has been planning to raise rupees 2,000 crore rupees from the public markets. The company got SEBI's approval last year, specifically on December 16 of 2022, to raise money from the markets. According to the regulations, the company is allowed to go public or to raise money within 1 year from that date of approval, which is now approaching very soon.
All right, and that brings us to the end of this edition of All You Need to Know. But up next is India Market Open, so do stay tuned. This is NDTV Profit.